Hey, good to see you. Something big just went down. President Trump has officially signed the Genius Act into law. Even if you haven't been following crypto news closely, this one's worth your attention. For the first time, the U.S. federal government is setting real, enforceable rules for digital money, specifically stablecoins. What does that mean? It means legal recognition, national standards, and potentially brand new ways to move money faster and cheaper than ever before. And here's the kicker. This law isn't just for crypto enthusiasts. It could reshape how all of us deal with money. If you've ever sent money to a loved one, waited for a check to clear, or worried about inflation draining your savings, this affects you. So if you've ever wondered whether crypto is really the future, or why the government keeps shifting its stance, keep watching. What's coming next may surprise you. Also, I'd love to know, what's your biggest question or concern when it comes to digital money or crypto? Drop it in the comments. And if you find this kind of breakdown helpful, consider subscribing. Let's dive into what this law actually does. The Genius Act, short for Guiding and Establishing National Innovation for U.S. Stablecoins, is the first law of its kind. It focuses specifically on stablecoins, which are digital tokens tied to the value of traditional currency like the U.S. dollar. So unlike Bitcoin or Dogecoin, their value stays around $1, making them far more practical for everyday uses, like paying bills, sending money internationally, or buying goods and services. Now, here's where it gets interesting. Under this new law, banks, credit unions, and even non-bank institutions, yes, that includes companies like PayPal or up-and-coming fintech startups, can legally issue their own stablecoins, but they'll need to follow federal rules. That means holding real cash reserves, basically keeping $1 in reserve for every digital dollar they issue. Think of it like having a vault to back every coin with real money. Why does this matter? Because, until now, crypto regulation in the U.S. was a confusing mess. One agency treated crypto like a stock. Another called it a commodity. The IRS had its own rules. It was all over the place. The Genius Act changes that by clearly defining what a stablecoin is, who can issue one, and how it must be backed, audited, and reported. But that's not all. The law also bans something many people were worried about: retail central bank digital currencies, or CBDCs. That's the idea of the Federal Reserve creating a digital U.S. dollar and giving everyone a government-backed digital wallet. Critics warned that this could let the government monitor or even control people's spending habits. The Genius Act blocks that. It makes it illegal for the Fed to create a retail CBDC. That's a huge win for people who are concerned about surveillance and government overreach. Interestingly, the bill wasn't always guaranteed to pass. Some lawmakers initially opposed it, fearing that even stablecoins could lead to too much oversight. But after a few personal calls from Trump, those lawmakers came around, especially once the anti-CBDC clause was added. It's a big shift from Trump, too. Just a few years ago, he was calling Bitcoin a scam and mocking crypto as made-up money. Now, in his second term, he's calling crypto one of the most important financial revolutions since the internet. That tells you just how seriously his administration is taking this now. Of course, politics is part of the story, too. Big crypto firms like Coinbase and Circle lobbied heavily to get this bill passed. So did Robinhood, Gemini, and even newer players like World Liberty Financial, which launched a stablecoin called USD1 earlier this year. Now, here's where things get a little murky. Reports say Trump's own family owns about 60% of World Liberty Financial. For a while, Trump's photo was even on their website with the title Chief Crypto Advocate. That title was quietly changed after people started raising questions. Lawmakers like Rep. Maxine Waters pointed out the obvious concern. Is the president making policy that benefits his family's business? The White House responded, saying Trump's assets are in a trust and there's no conflict of interest. But the questions haven't gone away. When it comes to money and politics, especially in something as new as crypto, trust becomes just as important as technology. So let's talk about what this means for everyday people like you and me. If stablecoins catch on, you could start seeing them show up everywhere. In your banking app, your paycheck, maybe even your tax refund. Imagine getting paid instantly instead of waiting for a direct deposit, or sending money to a family member overseas without getting crushed by fees or currency exchange rates. But it's not all upside. There are still major gaps in how consumer protections will work. How will fraud be handled? What happens if a stablecoin issuer collapses? What about your privacy? None of that is fully settled yet. The next 6 months will be crucial as regulators fill in the details, everything from auditing reserves to legal responsibilities if something goes wrong. And let's not forget, this isn't happening in isolation. Globally, other countries are already ahead. China's digital yuan is being used. Europe's testing its digital euro. The US has been slow to act, and this law is one way to catch up. Or maybe even leap ahead. Trump himself said this is about keeping the dollar dominant on the world stage. By tying digital coins directly to the US dollar, America hopes to maintain influence in global finance. Economists even suggest stablecoins could increase demand for US treasuries, which helps keep borrowing costs down and supports the dollar's role in trade. So what does this mean for you right now? You won't be forced to use digital money. Not anytime soon. This law doesn't mandate crypto adoption. It just lays the groundwork. Whether you choose to use it, invest in it, or ignore it altogether is still up to you. That said, the shift is coming. Coinbase and Circle are expanding. Robinhood's working on stablecoin wallets. Even traditional banks are paying close attention. Change is coming, not overnight, but steadily. And what we should all be watching is how this plays out for regular people. Will stablecoins actually make things faster, cheaper, and more accessible? Or will they just deepen the divide between everyday users and the financial elite? One big question: what happens to those who aren't digitally fluent? Not everyone is comfortable using crypto wallets, setting up two-factor authentication, or managing digital keys. If we don't build systems that are secure and easy to use, we risk leaving a lot of people behind. Here's the bottom line. The Genius Act marks a massive shift, not just in crypto, but in how we think about money itself. It has the potential to modernize the financial system, improve efficiency, and strengthen America's position in global finance. But it also raises tough questions about power, privacy, and equality. We are now in a moment where politics, technology, and money are all converging. Whether you're excited, skeptical, or just curious, it's worth paying attention. Because decisions like this, made in Washington, are already shaping how we live, work, and pay for things. If this helped you understand what's going on, feel free to subscribe. And if you know someone wondering what all this crypto law stuff is about, share this with them. And before you go, just for fun, drop your thoughts in the comments. Do you think digital money will replace cash in our lifetime? Or will we always keep some good old-fashioned paper around?